Good morning, everyone. This is Marshall Giller bringing you the morning comment for December 16th. Russia shocked the markets by hiking rates dramatically in the middle of the night Monday after the ruble plunged. Unfortunately, this strategy is more successful when the problem is foreign speculators borrowing a currency to short it. In Russia's case, domestic capital flight is the problem. So the rise in rates might only make things worse by causing the economy to contract. I think a bottom to oil prices and some resolution of the tensions with the West over Ukraine are going to be necessary before capital will be attracted back into the country, in my view. Unfortunately, both those targets remain far, far away. In fact, yesterday's brief bounce in oil didn't last very long. Oil futures fell as much as 1.2% in New York yesterday with no particular trigger, just a continuation of the recent fall. Our technical analysis concludes that the overall path remains to the downside for oil. As might be expected, the currencies of oil producers are generally suffering, while oil importers are generally benefiting. There was one big exception, though. The Turkish lira fell to a record low yesterday after President Erdogan arrested some journalists. Even though the collapse in oil prices helps Turkey's trade account, investors are quite wary in this current risk-off environment. I don't think the worst is over for the lira yet, as long as this political tension continues. Surprisingly, gold and silver both fell sharply, despite the increasing volatility in the markets. One might have expected the need for a safe haven asset to increase. In fact, the yen was the best performing currency overnight for just that reason. But it appears that gold and silver are trading more like commodities than like investment vehicles. As for today, it's PMI day. In China, the preliminary HSBC manufacturing PMI for December fell further into contractionary territory than was expected. That's another negative for oil prices. We also get the preliminary manufacturing and service sector PMI data from several European countries today and for the Eurozone as a whole. Those are expected to have risen, which could boost the euro. Also in the Eurozone, we've got the German ZEW survey for December. That may also be euro positive, as both indices are forecast to have risen. Now, during the European day, the spotlight is going to be on the Riksbank policy decision. Last Thursday's CPI for November showed that the country remains in deflation, which reinforces our view that the Riksbank will move towards unconventional measures, perhaps even at this meeting. The Riksbank governor will hold a press conference following the rate decision. In the UK, the CPI for November is expected to slow somewhat to 1.2% year-on-year, which could push further back the expectations for Bank of England tightening and leave the pound vulnerable. In the US, we get housing starts and building permits for November. Starts are expected to be higher, but permits lower. The preliminary market manufacturing for PMI for December is also out. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.